Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And hello there, I am Yatin Mota.
Well, Yatin, it was a sea of green across the screen today with the Nifty hitting a fresh high. That's been the story for the last few days. But we've failed to really hold on to those all-time high levels, right? Which is what happened today as well. But today we have good reason because there is a caution ahead of the Federal Reserve's interest rate decision. We have the India inflation figure also coming out today. Of course, food inflation has remained sticky. Food prices are on the elevated side, which is why the CPI inflation for the month of May is also expected to inch higher. So yeah, there is some bit of caution ahead of that, and we did pull back somewhere around 100 points on the Nifty from the day's high. Even the Sensex, it came very close to hitting its fresh, in fact hitting a fresh record high, but then it just about managed to settle higher by about 100 points or thereabouts. But broader end of the markets continue to outperform, Yatin. There's no stopping the mid and small cap indices. The Midcap index once again hit a fresh high. Both the Nifty mid and small cap indices were up in excess of 1%. Advanced decline ratio strong, 2:1. You had India VIX dropping further, in fact 2% kind of cut coming in there. Banks, pharma, media, these were among the gainers today. On the flip side, you had autos and some consumption names coming under pressure. Even realty was among our laggard today. So in terms of individual movers, PSU stocks continue to do well. The likes of Coal India, Power Grid again emerging as top gainers on the Nifty. Aside of that, you had Tata Motors, SBI Life, some of the technology names like Tech Mahindra also featured on the gainers list. On the losing side, you had M&M. Autopack, as I mentioned, has been under pressure today. So M&M was under pressure, so was Britannia, HUL, Tata Consumer, Titan. So all of these consumption names saw selling pressure. Aside of that, even UPL featured among the losers on the index. But Yatin, quite a few high flyers in the broad end of the markets today as well. As I mentioned, both the Nifty mid and small cap indices gained in excess of 1%. What were the key movers there?
So Nandita, just trying to talk whatever you said is that big events in the markets from inflation to US Federal Reserve, and I think the market is more into the wait and watch mode. Probably the bulls have not yet given up. But yes, more clarity on the US Federal Reserve policy because it's the mother of the central banks. So that is something which is keeping investors on side. But if you look at the advanced decline ratio today, almost 2:1. So the market breadth continues to remain strong. In the mid-cap stocks, we had Max Healthcare, Elecon Engineering, Suntech Real Estate doing well. We also have stocks like Trident which moved 7% higher. What did not do well is SW Solar down 4%, Pidilite down 3%, Marico down 3%. So the FMCG stocks which really gained around that election time, probably because a lot of funds were shifting into FMCG names, and now the trade is reversed because the government is stable. We had the cabinet portfolio distribution going well. So far the political scenario is smooth versus the market expectations, which was slightly turbulent on the day of counting. But yes, a lot of FMCG names. The likes of Zomato are also down. United Spirits. The stocks which gained in that week have been now giving some of their gains in the marketplace. But yes, it's a good day for mid-cap stocks and across the board there is some bit of buying which is seen in the broader markets.
That's correct. I think which is why PSU stocks have once again come back in favor. I think every day we see some PSU names feature on the gainers list. But on that note, let's take a look at some of the stocks that are on our radar this afternoon. Yatin, it has been show time for some of these media stocks, right? Second day in the running, we've seen Mediapack do well. Sun TV was, one stock that did well today, 3% kind of gains coming in there. There's a positive report coming in from Axis Capital, wherein it has maintained its ad rating on the stock and the target price has been raised to 810 rupees vis-a-vis 600 rupees earlier. There are a few negatives and positives that have been pointed out by Axis. Of course, positives far outweigh negatives according to Axis Cap, which is why it is positive on the stock. The brokerage has noted that ad growth may have been muted for the company over FY22 to FY24, but it's still much better than the 4% decline in ad revenues that was seen by Z. Aside of that, despite the high competitive intensity, it has pointed out that the company has managed to keep its market share stable in the Tamil Nadu region. It has seen significant market share loss in Telugu as well as Kannada, but even in markets like Bangla and Marathi, the market share has been low at somewhere around 2 to 3%. But it's also looking to foray in the Hindi market with Sun Neo. but it has still pointed out that the investment scale up here may be gradual. However, it's the sports business that has emerged as a growth engine for this particular company. It has seen healthy EBITDA margin, EBITDA surge has also been there, and it's expected to sustain going forward. That's what Axis Capital is saying. The improvement in performance in IPL 2024 is something that the brokerage has noted. It said that it will further aid revenue and profitability in FY25. Of course, we saw Sunrisers Hyderabad entered the finals, although it didn't really win IPL, but the performance has been good and steady throughout the entire tournament. Valuation wise, Axis Capital has said that it looks fairly inexpensive at current levels, and there could be significant shareholder value to be unlocked. There is the optionality in front of company to give back to shareholders by either share buyback or a one-time dividend payout. In fact, there is also a possibility of a demerger of its sports business, which, if it happens, will create significant value for shareholders. In the same vein, the brokerage has said that it values the broadcasting business at 13 times of price to earnings, and IPL business at 25 times price to earnings. So all in all, a positive outlook coming in from Axis Capital on Sun TV. A lot depends on whether or not the sports business gets demerged or not, and how the company will really create value for shareholders. But if you look at Sun TV in particular, the stock has done very well in the last 1 week. Since 4th of June, the stock has rallied somewhere around 12%.
Clearly, and media stocks, Nandita, are any which ways in focus. A lot of consolidation has happened in the industry, and Sun TV, after that Axis Capital target hike by nearly 35%, is doing well. But what was also doing well is the likes of Tata Motors. Now, if you look at Tata Motors, they concluded the analyst meet yesterday, and post the analyst meet, a lot of brokerages have been positive on the stock. Let's talk about Jefferies, and Jefferies is bullish on Tata Motors. They have a buy call on the stock with a target of 1250, which means a 25% upside from the current market price. Now, in the analyst meet, Tata Motors spoke three big things. Number one is gaining market share in the domestic passenger vehicle segment by nearly 35%. So their market share would probably be in excess of 20% is what they expect. Number two is the margin profile. Now, we have seen the electric vehicle segment and the commercial vehicle segment give sluggish margins, but now for the CV business, they are expecting double-digit margin. They are expecting the electric vehicle business to break even by FY26. And the third pillar of growth or probable investor interest was JLR becoming debt-free in FY26. So yes, on all counts, be it the domestic business or be it JLR, the management has given good commentary in terms of business as well as balance sheet. And the most important point which was pointed out in the analyst meet was the demerger between the commercial vehicle business and the passenger vehicle business of Tata Motors, and that also could create unlocking of value for shareholders, and probably this is what is keeping the stock in momentum, despite the fact that a lot of these auto stocks have come off from the recent highs. So Tata Motors, one stock on focus with the analyst meet concluding quite well, Nandita.
That's correct. I think yesterday as well, when the analyst meet comments were coming out, the stock had risen in trade. But another pocket that has been active and seeing a lot of demand, in terms of buying is cement. Right, we have a brokerage note also coming in by Motilal Oswal, where it has said that its channel checks are suggesting that cement companies may have hiked prices by anywhere between 8 to 10 rupees per bag across regions in the month of June after several failed attempts. But the brokerage has also said that it remains skeptical on whether or not the price hike will sustain going forward or not, because monsoon season is upon us. The onset across the country will happen in the next few weeks, and that could dampen demand going forward. So these price hikes may not really sustain, according to Motilal Oswal. In the eastern, western and central region, in the month of June, cement prices have been hiked by 10 rupees per bag. That's a 3% increase on a month-on-month basis, and prices in the northern and southern markets have been hiked by somewhere around 8 to 9%. In fact, 8 to 9 rupees a bag, I beg your pardon, which implies an upside of 2% on a month-on-month basis. So on an all India basis, on an average, prices have risen by somewhere around 3% month-on-month so far in June. Now, cement players had previously attempted to hike prices in the month of April and May. However, a major part of those hikes were reversed because of sluggish demand and intense competition. In fact, in the near term as well, Motilal Oswal has pointed out that demand is expected to remain subdued due to monsoons. But in the second half of the current fiscal, that is when the demand will rebound strongly, driven by the housing and infrastructure sectors. Industry volume is expected to grow approximately at 5 to 6% year on year in the first half, while in the second half it could grow at 8 to 9%. Now, of course, we saw that there were announcements in terms of building more houses under PM Awas Yojana, right, and that could boost outlook for cement stocks, demand coming in from the realty space as well. Also the fact that there is a lot of slum redevelopment happening, and improving road networks, railways, etc. That could lead to higher demand for cement, and which is why Motilal Oswal is constructive on the cement space. The top pick from the large cap space is Ultratech, while if you look at the mid cap picks, I think Dalmia Bharat and JK Cement are two stocks that Motilal Oswal is bullish on. If you look at how the stocks have performed since 4th of June, Yatin, most of them have recovered nearly 15 to 20% from lows.
Absolutely, and cement, what a super pack it is. Despite all the challenges in the sector, we have seen the large cap perform well. The Ambujas and Ultratechs of the world have been doing well. In fact, Ultratech, when I was speaking to the management in the quarterly numbers, they were talking about aggressive expansion plans. They have delivered a lot of capacity expansion plans, but I think inorganic route is something that will be watched out for in current financial year, because with Ambuja and Ultratech in freight to increase their capacities and consolidate, should be again closing few of these acquisitions in the smaller cement space.
All right, that was about the cement space. Outlook looking strong there, and of course demand is expected to improve significantly going forward. But with that, we've come to the end of this edition of Closing Bell. Lots to react to tomorrow. India inflation data, as well as the most important cue, the Fed's rate decision, and the kind of commentary that comes in from Jerome Powell will be keenly watched out for, because that could give clues as to when or if at all there will be any rate cuts this year at all or not. But with that, it's a wrap, and both me and Yatin, thank you for taking our time and joining in and sharing. In fact, I'm looking at the show today. But with that, stay tuned to Moneycontrol for all your other news and updates.